This is an educational example based on my personal approach. Results vary widely, and nothing here guarantees profit or future performance.
Hello, everybody. Welcome to the Trading with Ashley show. I have a very special guest with me today, my daughter, Landry. It has been a while since Landry has been on one of my videos, but for good reason. Landry, let everybody know what has changed in your life since our last video.
Goodness, so it has been a while, hasn't it? Because I got engaged to my wonderful fiance, and so I've just been wedding planning for quite a while now. But this morning I woke up and I told her, I was like, hey, I think it's time for me to jump back on your YouTube. So I'm so thankful that we came up with a great video idea, and I'm happy to be back. So thank you for having me.
Absolutely. And I know all of you enjoy when I teach Landry. And this is a topic that I think would be of interest to a lot of you because it has to do with growing a small account. I have several people that watch me. Some are blessed to be at a stage in life where they have larger accounts. They are able to sell options almost any stock that I'm looking at. But then others are a little bit frustrated because they love the trade setup, but they just can't afford the large ticker and 100 shares of the large ticker. So I have a solution, and I thought I would spend some time helping all of you through teaching Landry how to grow a small account through swing trading. So Landry, what do you think the term swing trading means?
Oh goodness, I knew this question was coming. I believe swing trading is I don't know, you might like use a method and then go a completely different direction is what I'm thinking. Like you swing the other way. That's kind of the mindset that I have. Disclaimer, you guys, I do not know much about all this at all. It's so much fun learning. So yeah.
That's good because our audience may not be as educated either. It's a funny word, swing trading, but basically, in its simplest terms, prices swing high to low, high to low. And so what we do is we try to capture them when they are low, and then when they swing high, we try to sell them.
Gotcha.
And so it's a simple concept, and it can expand all different ranges of time. So if you have time to swing trade and do a trade maybe in a day or a couple of days, we'll look for one data point. If you're going to be in it longer term, then we may look at a different data point for our entries and then for our exits. So that's the best part about swing trading. It's adaptable, and really you can trade any ticker. There's no restrictions because if you have, let's say, just $2,000 and you like a particular ticker, you can buy just one share of that ticker and we can swing trade it.
Okay, so since I'm completely new to swing trading, what are the benefits that you would say swing trading offers?
So swing trading offers you to really engross yourself into the market and start to learn the ebb and flow of different stocks. It's also, like I said, great for small accounts. There's no restriction on the tickers that you can trade, so the entire market is wide open to you. And the benefits of it really are it keeps the repetition dynamic alive. You start studying stocks, their price movement, and then you are better adapted when you're working with a larger account because you've been in the market very often and you're learning the patterns of these stocks.
Gotcha. Wow, awesome. Okay, now the benefits, those all sound great, but what are like the risk side? Because for people who are more cautious or very new to this like myself, like what are some of the risks I have to look out for?
First of all, I commend you for asking about the risk. When you are trading, it is so important to consider risk. There's no just easy button when it comes to trading. You have to learn different styles. You have to learn different ways to keep yourself safe. So the risk with swing trading is if you just throw spaghetti at the wall, meaning you don't use any technical analysis, you don't use any type of thought process to get in, you don't even check out the company to see if you even want the company, you just heard the ticker, maybe you heard it on YouTube or TikTok and you're like, I'm going to go buy that stock and I'm going to be rich. That's the risk. You can't just blindly go into this. Now, I'm going to teach you how to select your stocks and ways to keep yourself safe. The other risk is if you are not an active trader and you just put your money in a stock and don't have any automatic triggers to take profit or to get yourself out of this situation, if it pulls down too much and you just let it go, you could wake up one day, months later, look at your account and where did the money go? It's gone.
Gotcha. So you can't just like get in it and then be one of the ones that it just grows or something. You really have to pay attention.
Well, you do, and part of the paying attention is learning so that you can actually apply this to a larger account. Now, the index funds like the SPY and the Qs, you really could just put that money in there and let it grow because, yes, there's going to be ebbs and flows over time, but the vast majority of the time, the market goes up 75% of the time in a given year. And so you're going to see your money grow. But if you're wanting to be a little bit more active and grow a little bit more aggressively, swing trading may be a good fit for you, but it does require some monitoring.
Gotcha. Okay, well, I'm ready to tackle it. Let's do it.
So we're going to go into the computer. I'm going to take her into my office. We're going to look at different setups. I think you will find this very helpful. You'll be able to apply this to your trading, even if you have a larger account. Swing trading is really fun. In my community, when I look at certain trade setups and I'm trying to accommodate my large and smaller account holders, I will oftentimes come up with a swing trade that is the equivalent, and we've made really good money on that. So let's go. I'll show you what it's all about through teaching Landry how to swing trade.
Okay, Landry, we're going to look at a very common stock that people love to trade, and it's really, I would say, one of the strongest in the entire market, and that is NVIDIA. Now, they have earnings coming up this week, so we want to be a little bit cautious, but what I've noticed on NVIDIA is they typically rise prior to earnings, and then after earnings, there's a little bit of a sell-off. So you could play this one of two ways. If you want to trade this week prior to earnings or Wednesday after market, you could open up a position early in the week, and if it rises, you could sell it before earnings so you don't have to risk the stock coming down after earnings. Or you could do that and or wait until after earnings and see if there is a bit of a sell-off, look at technical levels of support to actually buy the stock, and then you could sell it when it pops back up. So there's a couple of different ways to play it when you have an earnings event. So let's go take a look at it on the chart so that we can look at it technically and get a better sense for when we might want to buy it and at what level we might want to buy it. So if you are looking at this setup, it's very bright, I'm sure. Yeah. It might be a little confusing, but let's look right down here at this. This is something called the RSI. Now, you and I have gone over this in other videos. It's the Relative Strength Index. And when it gets to 70, we're overbought. When we're at 30, we are oversold. So where are we sitting right now?
64.66.
So what does that tell you? If we're not yet at 70, but we're close, what might happen with the stock possibly this week like I described?
It's probably going to get a little bit higher.
Right. And if this does pop to maybe say 70, 72, 75, anything like that, do you think that naturally there may be a pullback in the coming days?
I think a pullback, and then like you mentioned, it might pop back up.
Right. Okay. So the RSI, this is the 14-day RSI. It's looking at your price action over the last 14 days, and it helps you to better determine at what point a stock may surge or pull back. So we're right there in the sweet spot. We could get some more activity, but then we might have a cool off, and the earnings event could be the catalyst for the cool off. Another thing is, it's where we're trading. We're trading on the Bollinger Bands. Where are we in the location of the Bollinger Band as far as trading?
We're pretty high up there.
Yeah. And so there is bullish momentum on the stock. We are over 50 on the RSI, as you see, but we're getting a little bit overheated. So you might want to enjoy a little bit of a push this week for a quick trade and then wait till after earnings for another potential trade. So we'll look at that setup if we want to buy maybe at the market early this week and then let it go after it rides up maybe just a little. And if it pulls back, let me show you a potential entry based on what we're looking at here.
Okay.
When we are over 50 on the RSI, there is usually support right here at the 20-day moving average. What is that showing us right now? That 20-day moving average is right there at about what price?
It's about $210.
Perfect. So if you wanted to, after earnings, you could set a buy order that picks this up at around 210. And then if you have a little bit of time left for the trade to work out and you don't want to monitor it, we could set a sell order, and we could set a sell order maybe at the top of the band to sell it at 230. That might be a good, reasonable swing trade.
Okay.
Now, if you don't even have this much money, or this is just would take too much of your money, there is something else we can do with a leveraged ETF. And so I want to show you that because the leveraged ETFs, they move twice as fast in both directions. So they're great to trade for swing trading, but you don't want to hold them too long. And I'm going to show you why.
Okay.
And so if you're wanting to try to find what the leveraged ETF is, you can go up here and you can put in the mother stock. This is NVIDIA. This is in Yahoo Finance. It's going to show you some of the other tickers associated with NVIDIA. So I like NVDL. You can click that one right here and get a better sense for what it's trading at. So you saw what NVIDIA was trading at. How much is this stock trading at?
116 and 33 cents.
So that's about half price from, what you would be trading with NVIDIA. So that's helpful with smaller accounts. Let me show you, though, why you don't want to just buy this and never look at it again. I like to use this site. It's Google Finance. And what you do, Landry, is you go ahead and you put in your main stock that is NVIDIA. So the stock that is more expensive, you put it in right there. But then if you want to see, compared to the leverage counterpart, how it moves, you would put in NVDL. And this is going to show you how they move together.
Wow. Okay.
You can see that NVDL in the yellow, it moves at almost the same pattern that NVDA does, but in a different dynamic. You can see right here from a one-day chart, NVDA moved down how much? What does that say?
4.38%.
Okay, and how much did NVDL move?
9%.
Okay, so you take the good and the bad with it. It moves more dramatically up when it's going up, but also down when it's going down. So that you have to just be prepared for that.
Gotcha.
And if you look at over time, let's look at how this tracks so you can get a better sense for how closely it does monitor it. So this is 5 days. If you held onto this trade 5 days, how much are we up in NVIDIA in the last 5 days?
5.94%, and then up in NVDL 10%.
Okay, so that's tracking almost, 2 times. Let's look at a month of action. Okay, it's still pretty close, right?
Yeah.
11 and 22.
Yeah.
Now let's see what happens if we hold on to this too long, and now we're at 6 months. What happens now? What are we seeing?
Okay, it's not as correlated. It's looking like.
Right, 20% versus 29%. Now, the reason that this happens is these instruments are designed for daily movements. So they do pretty well if you're using them from anywhere from 1 day, maybe even up to a month and a half. But once you get past that nightly reset that takes place, it starts to erode NVDL. So it can overcome it if it just keeps surging ahead. But if it stagnates and just kind of settles down, then it can't overcome it and it just starts eroding the price.
Gotcha. Okay.
So if you remembered on NVDA, the mother stop, we had looked at buying it at the middle of the Bollinger Band, the 20-day moving average. So if we wanted to try to apply that to NVDL, what price might we set our buy order at?
103 and 69 cents.
Right. So you can do something even like 104 just to make it easy for yourself. So you can set a buy order at 104, and then you might want to set your sell order at something up here about 125. Now, this is great if it catches it here and then it just keeps heading up. That's wonderful. But what happens if we lose this level of support and this thing pulls down? You want to set what I call a stop loss order that will ensure that you don't wake up one day and see that something that you bought at 104 has dropped down to $50 and you didn't do anything about it. So we're going to set some orders that will, after you buy it, that will protect you and it won't come down too far without you getting out of the stock, which you would lose a little bit of money in that situation. But I always say it's better to lose a little bit of money than a lot of money.
Gotcha. Okay.
And so we'll try to set this up where you'll either make twice as much as you could possibly lose, and that is a winning formula done over and over again.
Okay.
Okay, Landry, I'm in my brokerage account right now, and I actually have some shares of NVDL, and I had actually bought these closer to around that $85 mark. So I'm going to show you, after you actually decide when you're going to buy and you buy the stock, then I'm going to show you how to set a conditional order that will either take profit or get you out at a small loss, whichever one happens first. It'll close down the trade.
Okay.
So when you go in your account, this is in Fidelity, and some brokers allow this, some don't have it this sophisticated, so you would have to manually watch this and do it that way. But what I'm doing now is I will sell 10 shares of NVDL, and I am selecting conditional because this is a conditional order. Whatever condition hits first will be the one that gets executed. So if you look right here, I am going to select 10 shares. The limit is at what price am I going to be selling this? What is the limit? The amount I want to ensure that I get if I'm going to sell them. Well, remember, we had looked at the top of that Bollinger Band, and what had we decided that we would like? If we bought it at around that 104, we wanted to sell it, I think it was around 124. Okay.
Yeah, 124 124.
It was 124, something around there. Okay, so let's go back and actually finish filling out this ticket. So here you would put a limit order of 124. You're making this good till canceled because you don't want it to expire at the end of the day. So we've got that side filled out. Now here's the other side. We want a stop loss. This is going to ensure if this stock pulls back too much that we won't lose a lot of money. So we decide what our stop price is. So 124 is my sell price. If I bought it at 104, that gives me about a $20 difference. That's great. So I want to ensure that my stop is a little bit tighter than my take profit. So if I potentially can gain $20 from this trade, I want to ensure if it pulls back $10 that I'm out. I'd rather have my risk to reward such that I can gain more than I can lose. Does that make sense?
Yes, yeah, it does.
Okay, so my stop price, if I had bought it at 104, then I would put in here 94 would be my stop price. And that also is good till canceled. And so the way that this works, you can see down here the value. I will either sell these 10 shares at $9.40 or I will sell them at $12.40 and enjoy the ride up.
Gotcha.
So it all depends on which one happens first. But if you set this up like this, you can go about your life, plan your wedding, do all the different things that you are supposed to do. And then you could check periodically to see how your trade is running. You could always go in and adjust these up or down if you want. But this is a great way to either lose a little bit of money or make a significant amount. Because if you make $20 off this trade in a matter of a few weeks, that's actually a really good return.
Wow, yeah, that's awesome. And I would love all the time in the world to do some wedding planning.
Right. Set your buy orders, do the technical analysis on your stop, and then that way you can go ahead and decide when you get in your positions, you can set your buy orders, and if those trigger, then you go in and you set it up this way, and then you're good to go.
Gotcha. This is awesome.
Yeah. It's a lot.
So am I able to just apply this same kind of, not exactly, but the same formula depending on the conditions of the stock I'm looking at and just really apply this to every single one that I do swing trading with?
Absolutely. I would go and look at those technicals so that you have a better sense for what is the best entry point for them and then what your exit will be, always keeping yourself safe. And really the best way to do it is if you use a company, that's the best place to start. For instance, what comes to the door just about every day from things you are ordering for your wedding?
Amazon.
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 Exactly.
I have an Amazon package every single day.
So Amazon might be a great trade for you to make. Let's take a real quick look at Amazon technicals and then the ETF that might be the smaller ETF for you to trade. Let's take a real quick look just so you can apply this based on what you learned. So here it is, AMZN. This is the mother stock, Amazon. And what you'll want to do is, again, look at the chart. It's trading at about, 260, 265. And when you look at the chart, you want to look at what a good entry might be. And then we'll go apply that to the smaller stock. So right here, we're trading at 58 on the RSI. Okay, so this is good because we're still in a bullish mode, but we just slipped under that 20-day moving average. So this is actually a really good entry. You could possibly just get the shares here if you want, and then wait till they go to the top. Or if you want it to be a little bit more conservative, you could set your buy order down here at the bottom, maybe at around 250. So now, if we don't want to spend this much money on our trade, let's go look at the little sister. Now, this is the leveraged counterpart. It's AMZU. It's trading a lot lower than you would see for the amount of money it's going to take to buy this. But it's at a very similar spot as we saw on the mother stock, right there under that 20-day moving average. So what you could do, Landry, is you could go and buy this week and then set up your conditional order like I showed you. Or if you wanted to, you could set a limit order to buy it maybe at 38. So if you bought it at 38, you would want to, at that point, then go set in your conditional order. You'd want to, let's say $5 is a reasonable amount for this to grow if it just catches a little bit of a run. So you would set your sell order at 43 for that $5 gain, but then you would want to go ahead and set a stop order about $2.50 below your buy price.
Gotcha. So half of gotcha.
That's right. So you would do your stop loss. So that would be $38 minus your $2.50. That's about $35.50. Ironically, Look what is at 35.50. That red line, you see this?
Huh?
This is the 200-day moving average. It's a big support for a stock. Now, this can be a little skewed on these leveraged tickers, but still, if this doesn't hold, then we could be going down further. So this is a really good trade setup to go ahead and set your stop right here, and then your take order would be right here at around that $43 mark.
Okay, we are now back outside. Speaking of being back outside, do you want to tell them what I do after an intense day of trading? Where do I go?
She comes right here on the back porch. Y'all, she will come out of her office and just make a beeline, and she'll just say, I'm done. And then she'll just come decompress out here because it's just so beautiful and peaceful out here. Who wouldn't want to?
Yeah, and I've just noticed now that I trade for a living, I really just crave nature, and I just want to be away from the screens for a little while. I just play with my sweet little dogs and just enjoy everything that nature has to offer.
Yeah, I mean, after being at a computer all day long, it feels good to just, get back in touch with some nature.
In the sunlight.
Yes.
So what do you think? Was it harder or easier than you thought?
It was so much easier. Sometimes this process, it can be so overwhelming for me because I'm one that I need a lot of visuals and explanations. And so seeing it all put together like that, though, you made it really easy to interpret. And I want to go do it myself and see, how I could do this process myself because I don't know, it was so much easier than I anticipated. So good. And hey, I feel like if I could do it, anybody could do it.
Well, you're busy right now. You've got a lot going on. Those limit orders will protect you. And then it would be nice to just kind of go in your account and say, okay, did I make some extra money? Maybe you have to use that towards your honeymoon or see house. All that stuff matters, and it stacks over time.
Yeah, and it's such an important time of life right now with buying a house, buying a car, going on a honeymoon, all that good stuff. I'm very, I guess, cautious with what I do with my money because, I want to make the smartest choices. And so stuff like this really encourages me to, get in the stock market and know that it's not all scary. It's not all intimidating. Not when you break it down and learn the process of it all. And people like her really helping me out and guiding me along the way. I'm really appreciative and really excited. So
I need to let y'all in on a little secret. It takes a lot of people to make a business like mine work. And so one of the things that Landry does to help ensure that I stay nourished is she is constantly cooking. And so I get to enjoy all of her great meals, and she'll come in there after I've been trading for several hours. She's like, Mom, have you eaten? And so I just want to thank you for ensuring I stay nourished. I can keep trading and helping people.
You're letting me live here at home, so I'm like, I'm going to earn my keep. I'm going to cook. I'm going to clean. And I just appreciate you so much for all that you do for us. So I love you. I love you so much.
And I enjoy these moments with you. With YouTube, they're going to be at YouTube Universe forever. So we could like, thank goodness. All right, everybody. Remember, if you're with me trading with Ashley, whether you have a large account or a medium-sized account or even a small account, there is no trader left behind. Now, if you want to watch some other videos that I did with Landry, I'm going to leave that playlist for you. It's called Trading with Family. I'll leave it for you right here.